And then why figuring out your taxes in retirement could turn into a full-time job. America's accountant Dan Geltrude is here with his tips and tricks as tax season is upon us. You're watching Mornings with Maria live on Fox Business. Dan, great to see you. Thank you so much for being here. We want to know what's most important as we approach April 15th. What can you tell us to ease the process around retirement with regard to taxes?
Well, when it comes to retirees, Maria, the most important thing is how you manage your income. It's that income strategy, because it's not about what you make, it's about what you can keep. So the first thing that you really want to look at is the most tax-efficient way to make those withdrawals from your IRA and your 401k. Also, keep in mind those required minimum distributions that you have to take when you're reaching 72 and or 73. The other thing that you can do, by the way, is, which many people don't know, you could actually net those distributions against contributions to charity. Net them directly. Great way to do it. Roth IRAs. Comes out tax-free. Again, you want to look at that income and say, how can you keep your taxable income down? And another thing to keep in mind too, Maria, is depending on what your income level is, your Social Security benefits could be taxable. So again, how you manage that income is critical in terms of holding on to as much as you can in retirement.
Yeah, and what about passing money or assets on? What's the most important thing we need to know about that regarding inheritance?
So what you want to do there, Maria, is you want to take advantage of the annual gifting, which is $17,000 per person. So you want to try to reduce to the greatest extent you can your taxable estate. And keep this in mind. In 2025, the Trump tax cuts sunset. So the ability to pass your assets along to your heirs will be cut in half at that point. So you got to keep in mind, if we don't get some new tax laws, and we may or may not, and it sunsets, you want to start to move those assets now while you still can.
So the Wall Street Journal is reporting this: married couples can get a tax break by contributing to a spousal IRA. Couples can put extra money into a secondary retirement account even when one of them is not currently working, Dan. This is interesting to me. I love 401k and retirement plans. It's like, I'm all about retirement plans. Put the money, sock it away, don't touch it. How often do you see retired couples using this kind of an account? Is that an effective strategy?
It is an effective strategy, but not everybody is thinking about that, Maria, because what they're thinking about is, I want to take money out. But if you have the ability to continue to put money into an IRA, you should do that. Now, this spousal IRA is something a lot of people don't know about, because you could have a spouse that's not working, but yet if you're over 50 years old, you can contribute an additional $7,500. So between that married couple, that's $15,000 that you could put away tax deferred. Now, one other thing, though, it is subject to income limitations, so you need to keep that in mind, too.
So you're not getting taxed on the money in the retirement plan until what?
Until you start to withdraw those funds.
Okay.
So you get a tax deduction when you put it in, and then when you pull it out, that's when you pay the tax.
Mark Tepper, jump in here.
Dan, great stuff, man. You just mentioned income limitations on IRAs, so I want to get your take on backdoor Roth contributions, which is where when your income is too high to contribute to a Roth or too high for you to make a non-deductible traditional IRA contribution, you make a non-deductible contribution to the traditional IRA and immediately convert it over to a Roth. What's your take on that strategy?
Well, I think it's a great strategy, because the thing about Roths is, right, when you put the money into a Roth IRA, you are paying the tax. That's not great. But what is great is when you're pulling that money out, including its growth, you're getting those funds tax-free. So it's an excellent tool for people to use, and not enough people are thinking about doing that.
Really, really important comments from you, Dan. Is there anything about tax changes, tax law, that we should be aware of this year that's different from last year?
Well, the main thing that we're getting a bit of a tax break on, Maria, due to inflation, is that the tax brackets have moved. Not the tax rates, but the brackets have moved up about 5%. So, in effect, everybody is getting a tax cut. But, of course, the other side is, Maria, we're paying more for our goods and services. So, net, we're probably negative, but a little bit of relief from the IRS on that one.
All right, we will leave it there. Great info, Dan. We so appreciate your time. Dan Geltrude joining us this morning on the upcoming tax season. We'll be right back.